Hello and welcome to the TM Tax Practices video series, Getting Ready for Tax Season. This is video 8 of 9, where we are looking at, should I expect a refund or will I owe? Now, I did decide to go ahead and dedicate a video to this subject because I get asked that question enough that I wanted to go ahead and touch on it for you. Now, generally when I get asked that question, I do have to say it really does depend. I am going to have to look at your total income, your adjustments to income, your standard or itemized deduction, and any credits that might be available to you. But in general, you can typically look at your previously filed tax return and see what happened in the prior year if the current year had no change. Now, there may not have been a change for you personally, but there could have been a change to the tax law or rules. So tax brackets change, income limits change for certain credits, standard deduction amounts do change year to year. So you can't rely on the previous year 100%, but the previous year, again, may be able to give you an idea if there was no change for you. Now, although it does greatly depend on your particular set of facts and circumstances as to whether you'll get a refund or whether you'll owe, there are some key things that we can talk about to try to prepare you for what you're looking at, okay? And one of those is understanding that our tax system is a pay-as-you-go system. And what that means is that taxes are paid as income is earned. As the income is earned, the taxes actually due. And with the W-2, that is going to be paid via withholdings, and that is the employer's responsibility. It's your responsibility to give the employer accurate information about your filing status, your number of dependents, whether you're doing the standard deduction, and some other factors we'll talk about. But it is the employer's responsibility to calculate and withhold from your W-2 employee income. Now, you might be a self-employed or sole proprietor or have investment activities wherein you're receiving a 1099. Some 1099s will have withholdings. If you're a sole proprietor, you're receiving 1099 payments, you could ask that payer withhold income tax for you. Some will, some won't. You can ask for them to do that. And sometimes with a 1099, you might be required to withhold or required to have backup withholdings because you had not previously given the proper information in prior years. So if you didn't provide a W-7 and that previous employer was not able to report your 1099 income based on your social security number, a proper address, and so on, then you may be required to have backup withholding on your 1099. However, typically with a 1099, you are going to be making estimated tax payments, okay? Quarterly estimated tax payments. Now, if you have K-1 and business income, you're also going to be making estimated tax payments here. The K-1 and business income, your sole proprietorship income, or your K-1 if you have an S corporation or a partnership, or you're a partner in a partnership, they're going to provide you with a K-1, which is basically much like a W-2 or a 1099, and that is an informational form or tax return that's being provided to you so that you can report your appropriate amount of income. Now, throughout the year, though, you should be making estimated tax payments based on those amounts of income. Now that we understand a little bit about the few different types of income and how the tax is supposed to be paid throughout the year on those things, I want to talk about understanding the refund. So everyone talks about at the, not end of the year, but at the very beginning of the next year, between January and April, oh, it's tax time. Okay, it's tax reporting time. It's not tax paying time. It might be tax paying time for you, but you should have been paying taxes via withholdings or estimated tax payments throughout the year. All year is tax time. Again, we're pay as you go. But at the end of the year, you're going to report your total amount of income, your total amount of deductions, And then it's going to determine if you are entitled to a refund. Well, who's entitled to a refund? First of all, if you paid more than you owe, so through your withholdings, through your estimated tax payments, if you ultimately ended up paying more tax than you owed, you have overpaid and you're going to get a refund. How does overpayments happen? How do overpayments happen? Well, maybe you had several different types of income. Your employer was only withholding based on income that you were receiving from them. But then let's say you had some self-employed income and your expenses actually exceeded that amount of self-employed income. So you netted a loss. That loss is going to be net against your W-2 income, which is typically going to result in a lower amount of tax, in which case you may have overpaid and be due a refund of the amount that you had withheld throughout the year. Sometimes people elect not to have any withholdings. If you qualify to elect not to have any withholdings at the end of the year, you may not receive a refund because you didn't pay anything in. If you're paid via 1099 or a sole proprietor and you made no estimated tax payments, you had no withholdings of other income, you didn't pay anything in, you likely will not have a refund. Some exceptions to that would be if you, the adjustments to income isn't an exception. The adjustment to income is one reason why you may have overpaid. Maybe, again, your employer didn't understand or know that you had some adjustments to income, such as HSA contribution, educator expenses, retirement plan contributions. And because of those adjustments to income, it lowered your total taxable income and you ended up paying more in. Now, some areas, like your itemized deductions, you may have more itemized deductions than your employer had anticipated. Maybe your employer was just calculating the standard deduction and withheld based on that. So you itemized and ended up owing less in taxes is one way that happens. Another way that happens is tax credits. Perhaps you were entitled to some of the tax credits we talked about in an earlier video, the child tax credit, dependent care credit, education credits, savers credits. There are several tax credits that you could be eligible for and take advantage of and result in a refund to you. Now, some credits are refundable and some are not. Go take a look at that tax credits to be on the lookout for a video to get a little bit more information there. Now, looking a little bit closer at the withholdings and estimated payments, I did say we'd look at that a little closer. So factors used in calculating your withholdings is number one, it's going to be your filing status. So your employer is going to look at if you're married, filing jointly, single, or head of household. Remember, those three things are going to be determinant factors in what your standard deduction might be, as well as a plethora of other things. And then based on your filing status, they're going to look at the income bracket and start your withholdings based on that income bracket. Now, what determines your income bracket is also going to be they're looking at your child and other dependent credit if you're eligible for those. If you have any other income outside of your employer, you can let them know about that. They can calculate that into the withholding for you. And they're going to look at your standard or itemized estimated deduction, okay? So they're going to be actually looking at all of these things, but they can only look at those things if you provide it to them. That's why it is important to kind of go through some of these videos and really have an understanding of the credits of the standard versus the itemized deduction and see what yours will actually be. And looking back at your prior year, previously filed tax return to see what was done there. Or if you're not having withholdings, again, it's a 1099, a K-1, something like that. You're making your quarterly estimated tax payments, and those quarterly estimated tax payments will be based on the quarters as kind of listed below here, and they're due April 15th, June 15th, September 15th, and January 15th of the following year for that respective quarter. Okay. Now, there is an underpayment penalty that might be imposed if you do not make your regular payments. Now, if you're having income tax withheld, you're never really going to have to worry about the underpayment penalty. However, if you are making quarterly estimated tax payments, you are going to want to make sure you make those payments on time, because the underpayment penalty is based by quarter and those due dates listed there. Okay, so like I said, determining whether you're going to owe or whether you're going to get a refund is not a X minus Y calculation most of the time. Again, you may be able to look at your previously filed tax return, see what happened there. If everything is pretty much the same for you, then it could give you a general idea of what you're looking at. But again, these were just some items that you want to make sure you're paying attention to year over year. Again, your withholdings, your estimated payments. Make sure that you are providing accurate information to your employer, and just keep in mind that there are those deductions, adjustments, and credits that we will be looking at come tax time when we prepare the tax return to see whether you will get a refund or whether you'll owe. Again, if you have any questions, you can shoot us an email at info@tmtaxpractices.com. Visit our website at tmtaxpractices.com to check out our other resources available to you and get in contact with us. Like, subscribe, connect on Facebook, YouTube, and LinkedIn.